Hi guys, welcome back. Today we're going to be starting off with the Q2 FY24 workshops, like similar to what I've done in Q1 FY24 or the quarter before that. So the main purpose of doing this is to show you how do you track the business, how do you follow up with the management commentary, that has been done in the past. And, it is to show you like, is the company doing what it told, right? Because even I keep reiterating the fact every time, like track karo, business ko track karo and, just follow up as the business does. So that is what we're going to do. And as you all know, I have around 100 companies in my tracking list. I will try to do 100 videos as much as I can in Q2 FY24. But today we're going to be starting with Metro Brands Limited, right? As usual, the pattern remains the same. We discuss about the business model for the first few minutes, 2 minutes, just crisp and clear, and we go ahead, what has happened in the recent quarter or in the latest quarter. If you want to understand the business model in depth, I would highly suggest you that you go to my YouTube channel. There's a playlist called Business Analysis, and you can just there is Metro Brands Limited ka video also. You can just find it over there. So let's just start right now. So we will be talking about Metro Brands Limited, right? So the first thing first, the business model. So Metro Brands Limited is a shoe company, right? They manufacture and they sell shoes. When you talk about manufacturing, unlike the other companies, they outsource their manufacturing to somebody else. They design the shoes and everything, but they outsource the manufacturing. So it makes them asset light model in a way which is working very well to their advantage. The second thing is if you compare any of the footwear companies that are there in the market today, when I talk about market as a listed space, they are the only people who are catering to the Uber or the premium brands, right? Because if you see, majority of their revenue that is there is coming from the about 3,000 category, right? That is about rupees 3,000 category that is there. So even if you see right back even in the last year, they were the only company that really emerged. There were so much problems happening in the footwear sector, but because they cater to a premium segment, their products were premium. They were the only company that came unscathed during those events, whether it is COVID ka, raw material inflation that happened, or whether you talk about the GST changes, right? Now, when you talk about the product portfolio, they have 70% of their shoes that are there, that are their own shoes, that is in-house done. They design it, they have their own brand, that is their Metro, Mochi, Walkway. That is 70% of the contribution to the top line. The 30% that are there is the foreign brands, such as Crocs and Flip-Flop and the newly acquired FILA, where these people have the license to sell the products of Crocs, FILA and Flip-Flop in India, right? So this is what it is. This is more or less the business model. This is what Metro Brands does at the end of the day. Now, coming to the result, if you see, you will see that the top line has grown by 15% on a year-on-year basis, and you will see on a quarter-on-quarter basis, it has degrown by 4.1%. Before we go ahead, I would like to specify one thing is when you see any retail business this quarter or any consumer business, please do not compare QOQ, because QOQ there is seasonality. Okay, in Q2, what happens? One is a monsoon season. As a result, people don't go out and shop that often. Okay? And that is one of the reasons why the sales is not that great. The second reason is end of season sale. When you talk about Metro Brands Limited, they do end of season sale in Q2 and Q4, which means what? You end of season sale, I think everybody knows whatever chappals you get at normal price, you get at a discount, right? So of course, there will be some revenue impact over there also, because you want to get rid of all this dead stocks and inventory. That is why the end of season sale also happens in the first place. So because of these two reasons, Q2 is always a lean quarter compared to, let's say, Q3, Q1. So the best quarter is Q3, followed by Q4, then Q1, Q2, right? So that is a nature. That is just a nature of the business model. So do not go to compare on a QOQ basis. The second thing, if you see the bottom line, that is it. If you see the profits also, the profit has degrown 13% on a year-on-year and 27.5% on a quarter-on-quarter basis. Now, the reason for the profit to degrow is because, like I told, they have acquired this new brand called FILA, right? FILA is a shoe brand. In the sense like sneakers brand, just like Nike or Adidas. They have acquired this brand, and due to this acquisition process that is there is a 14 crore ka loss that has been happening not just this quarter, but even the last 2 quarters. They have to get rid of inventory and all that. Because of that 14 crore ka loss, you will see, there is this bottom line ka impact ho raha hai, right? Other than that, again, agar profit bhi gir raha hai, even the PAT margin will also have an impact, right? So even the PAT margin, if you see, it has reduced from 15 to 11.8%. So this is, like the crux at the end of the day. If you see, the result has hardly grown by 15%. In terms, if you have to talk about the store expansion rate, because see, at the end of the day, jo bhi ho, aapka jo store hai, there is a limited amount of growth that can come. At the end of the day, a few years down the line, it will be the same rate. आपका SSG जो है, it will stall. So you need to keep opening new stores. You have to do expansion to do your growth rate. And वहाँ पे कोई भी problem नहीं है. They have done well in terms of store expansion because they had targeted when they had come out for an IPO, they had I think around 600 stores and they targeted 900 stores, by FY25. And if you see the target, they're on track. They have opened 29 stores according to that, so no problem. And the other thing also I would like to highlight is I keep telling you all, जहाँ भी आपका store expansion हो रहा है, it is okay, but store expansion should not come at the cost of the margin. So even if you see the margins that are there are stable. Gross margins for Metro has always been between 55 to 58. That is a sweet spot. Just like Nissan Joseph tells, 55 to 58 is a sweet spot. Even that is also in that range only. So not to complain in terms of any of these, in terms of execution, if I have to tell you, there hasn't been anything wrong, because last quarter bhi agar aap dekhte ho, like management has told, we are guiding for a 15 to 18% growth, and that is what they have done, right? The expectation what was that they have clocked in that. So not a lot of changes. The only thing I would like to highlight here is in terms of like business ka update kya ho raha hai. See, because if you can see, right, because of that FILA ka acquisition, itna drag ho raha hai. The complete income statement is being a drag, profits dry up ho rahe hai, right? So here FILA ka inka kya problem ho raha hai FILA ka, because when they acquired FILA, there was a lot of debt and inventory. See, Metro Brands Limited is a premium brand at the end of the day, right? Because their shoe ka, how do I tell? The footwear ka price range is somewhere between 3,000 to 15,000. That is the most you can find, right? And FILA ka, the current inventory is there. It is not up to the market. It is not exactly where the company sees the brand to be. In fact, if you see, when they acquired FILA, they were very confident as to, they want FILA to be to the powers of Nike and Adidas, and they wanted to replicate what FILA did back in China. If you have time, I would say please read the DRHP of Campus, right? And Campus has clearly mentioned as to like how how the sneaker market is growing and what is the importance of this. And there when FILA was there in China, when FILA got acquired by a company in China, at that time, Skechers was there, Adidas was there, Nike was there, so the competition was very, very tough in the sneakers market. But yet they formed their edge. They marketed and branded themselves as such that later they started having a turnover of $3 billion. So this is something they want to replicate. Metro Brands Limited, at the end of the day, they want to replicate what FILA has done with China, and that is why they are taking so much caution in the first place, because currently, like I told, FILA ka gross margin is at 35%. Metro ka, all the products ka gross margin is between 55 to 58%. So it is still not there at the par. So what they are going to do is, the first year that is there, like this is the first year of FILA acquisition, they're trying to get rid of all that dead inventory. That is one. And redo the entire distribution channel for FILA. The second year, they will focus on branding and the other things, so FILA can be at par with the other sneaker segment. The third year in FILA, they want accelerate store. Like for example, agar aap dekhoge, you will see that Metro, Bochi, FitFlop also for that matter, they started growing their stores. That is something they want to do probably in third year. And they are expecting that break even jo FILA ka hai, break even ho sakta hai by FY25, right? So whatever this FILA ka jo drag hai, ye inventory losses hai, everything, this until this year jo unka plan hai, like first year, this will continue to be there. This 14 crore loss again might spill over again in Q3 and Q4 also. So that is to be noted. The other thing what I would also like to highlight is, Metro is something, it was known for its premiumization journey. I kept talking about this, and there also there is no change. If you see, agar aap dekhte ho ki like lesser than 3,000 jo shoe hai, right, that segment has reduced. And about 3,000 jo category hai, it has increased from 43% to 48%. So unka premiumization ka jo journey hai, that is also great. Store expansion is great. So everything is great. Just because of this FILA ka ek jo hissa hai, because of that, the entire thing is getting dragged down. So all in all, other than that, Metro has done great. Nothing to complain. The other reason, again, combined with Q2 ka seasonality with monsoon and the end of season sale is, jo bhi festival Q2 mein aata tha, that has been shifted to Q3 this time. I think you would have seen, if you take your calendar and seen, I think most of all check the calendar for holidays, right? You would have seen that all the festivals have been delayed by 2 to 3 weeks. So because of that also, the impact has been more in Q2. Another thing to note. So that is it. If I have to talk about the balance sheet is clean. There is no asset liability mismatch. Debt bhi nahi bada hai utna sa. Only thing is inventory thoda bada hai. Now the reason for that inventory is, you would all have known that BIS jo hai, that is a government body that sets up regulations operations, for different kind of industry. Like you have to maintain a standard of your raw materials. So they had, they have given a circular that, that footwear companies have to maintain a certain standard with the kind of rubber they source. And because of that, to avoid any supply chain ka disruption jo ho sakta hai, because of that, they've loaded on the inventory beforehand only, which they have done even back also. If you see in the FY21-22, even during that time also, when COVID ke wajah se supply chain disruption ho raha tha, even that time they did the same thing and their execution was brilliant. Because agar aap dekhte ho Relaxo ka, uske wajah se inventory losses hua tha and everything, whereas Metro was the only company that handled everything so well. So I don't see that inventory also being an issue right now. That is one thing. Other than that, jo bhi cash flow from operations bhi hai, even there also the money has either been spent on capex, that is plant, property and equipment. Yeah, it has been parked somewhere, because plant, property and equipment mein you can see, right, they're opening so many stores. Last quarter I think they opened around 40 stores, and this quarter they opened around 29 stores. And whatever stores you open, aapka cost jo hai upfront hota hai, sales to baad mein aata hai. So I think that is where it is totally justified. So the only problem remains, of course, the acquisition of FILA, and again it will continue to be a drag in the bottom line for the complete year of FY24. So all in all, to end it with MBL, the problem right now is, see, when you look at MBL ka story, right, when the IPO came and everything, it was clocking a growth of 40%, right? Or एक time आया 35% से grow करा था, then 30, then 25, अभी last quarter था 18, and this quarter it is around 15. So you can see that the pace of growth jo hai, it has been falling down, right? Every quarter, or over a period of time, the pace of growth has fallen. Now, whatever could be the pace of growth ka reason at the end of the day, it could be because one of the obvious reason is pent up demand. When COVID was there were, when people were coming out of COVID, nobody used to go to shop, and all of a sudden there was this demand. So now there is no longer demand, and it has been normalized. That is one thing. The second thing is, right now their base is huge compared to what it was a year ago. That could also be another reason. So whatever the reason you can give me, it is fine. But you cannot deny the fact that the pace of growth for Metro Brands Limited has come down. And currently at this valuation that is there, I think it is at around 70 to 90x earnings. It is not justified. Like, I mean, I would never be okay paying like around for 15% growth engine ke liye 90 times or 70 times earning. It is, see, when you see the Metro Brands ka valuation ka thing jo ho raha tha, the market rewarded that kind of valuation for the growth. Abhi jo growth hi nahi hai, to it doesn't justify that valuation. That is the thing. Other than that, there is nothing to talk about it. That is more or less, as to like what is happening with Metro Brands Limited. The only thing remains, the other thing, yes, I would like to highlight is, one is the fact that pace of growth cut raha hai. The second is, on top of that, operating leverage nahi mil raha hai because of FILA ka acquisition se. The third thing along with that, even if I talk about क्या बोलते हैं, even if I do not consider that FILA ka loss, 14 crore ka loss, even if I take it off, even then also the bottom line has grown by 5% on a year-on-year basis. Because see, they're opening so many stores now that operating leverage is not coming to them, because it takes certain time, right, for the stores also to be operational and to get that to reach a certain level of SSG, same store sales growth. As a result, because all of this, and currently at the valuation that is there, it makes it as a very unattractive proposition, you can tell right now. Other than that, yes, that is more or less about Metro Brands Limited. That is the update. So yeah, I hope to see you again tomorrow, and we will discuss another new business. Until then, take care. Bye-bye.